Hi there, welcome back to the Dukascopy TV studio here in Geneva. I'm Ben Jones. Joining us once again is Thomas Veillet, here to give us a market update. Thomas, thank you very much for joining us again.
Thanks to you.
Now, I'd like to begin by discussing this current correction. What threats does this pose, and is there a worry that some countries may rise their interest rates earlier than expected?
I don't know if we can say some countries, but at least USA might raise the interest rate earlier than expected. This is at least the fear that we are having right now in the market. Basically, last week economical numbers were really good. Everything was perfect. It was almost the confirmation that everything was great. Then that the Fed could be handed the support of the market by the end of October as expected. Then everything should be fine for the rest of the year. Then people started to think, yeah, but if everything is fine, that means if it's too fine, too good to be true, maybe they're going to raise the interest rate earlier than expected. Everybody is expecting like March 2015 or until October 2015 in this time frame. And suddenly they say, okay, if they raise interest rate too early, it's not good for the market. We all know that. So market got scared and valuations are high and people say, okay, maybe it's time to take profit. Then there is a lot of indication that we are too high. Then the market starts tanking and people are suddenly afraid about inflation, suddenly afraid about raising interest rate. And that's the main focus. The question now is understanding if it's just a short-term fear and it's going to be over by the end of this week, or there is something more. This is the big question now. This is the problem we are living in the market right now.
Definitely. Now, do you think the markets are taking note or taking notice of the current geopolitical tensions? But if not, then why not?
Absolutely not. So far, at least. I mean, we are like in the middle of everything is good, and when there is bad news, the market tends to say, okay, it's bad, but not that bad enough because there is better news. So they are focused on good news, and they tend to forget bad news, especially the geopolitical stuff. And we had some fear during the beginning of the crisis in Ukraine, but otherwise everything is over. I mean, they don't care about what's happening in Gaza. They don't care about what's happening after the crash of the MH17. And same story for the rest of the crisis we are in. We are just focused on macro or micro. That's it. And I don't know why, but maybe suddenly something's going to blow up more than the rest. Then we're going to take notice. But sometimes when it's very quiet, somebody notices something and they say something, but we don't feel like there is a huge impact in the market so far. So the clear answer is no. And why? Because we are so focused on economy. If you look at the number and you look the impact of those countries who are at war right now, it is very few in the whole world of investment. So people say, okay, it's maybe 2 or 3% of the whole impact of the market, so we don't care.
Okay.
It's sad, but we don't care.
Yeah. Now, Janet Yellen has recently stated that the social media sector is in a bubble, and it could be said that it's comparable to the internet bubble in 2000 with the current number of IPOs we're having at the moment. Are there any risks here?
I have to say yes. I was there in 2000. I left the internet bubble in live. I was trader at this time. I had position in the tech market at this time. Everybody was buying the market because it was .com. You had any crap company, just put .com at the end. It was great, fantastic IPO. Then you make money. You are rich and you can get retired. So suddenly we are coming on the same kind of story. I wouldn't say that Twitter or Facebook is the same kind of story. Facebook is maybe in other cycle ahead, more in front of the story. But Twitter doesn't make any money, almost no money. Suddenly good number, better than expected, and the stock is skyrocketing like 30% higher. It's totally crazy. And there is a lot of similarities if you compare what we have seen in 2000. So this is the first risk. Second one, if you look at the number, IPOs. We had a lot of IPOs end of March 2000, and the same story. We are reaching new record of IPOs, people trying to sell their company as quick as possible because they want to make money before everything's crash and burn. So there is some indication that the market is like exhausting. Is at the end of a cycle, but the question is how long it's going to take. I don't know if maybe it's the beginning of the correction, then we're going to be in 25% lower in 2 weeks. I don't know. It's a big question. But on the other hand, maybe it's just a short-time correction. The market will rebound, and in this kind of end of bull market cycle, you can have like a huge run, like 10-15%, just because there is a last hop and jump on the upside, and then crash and burn. But so far, there is like a huge warning that something is bad in the terms of IPO and interpretation of the valorization of these new companies. For me, it's clearly the same story as we have lived in 2000, but maybe we might again have a short run for the last 10 or 15%.
Okay, so finally, Thomas, do you think the market will rebound or crash?
You can just play head or tail or coin. I don't know.
Heads or tails.
Yeah, sorry. You can just try that because, as I said, it's very difficult to say. For me, we are clearly at the end of a cycle, and we're gonna have a correction. The problem now is when you read the newspaper, everybody is expecting a correction. Everybody knows something's gonna happen. We're gonna have a crash. We're gonna have a correction. 25, 30%, blah, blah, blah. Everybody knows. So by my experience, I'm not an expert, but I would say by my experience, we never seen a crash happening when everybody knows. So maybe we're going to have the last rebound, then just put all the people who are not on the market, okay guys, come in, buy the market, then we're going to have the correction. I would say if I have to take a bet, I would say 60% we're going to have a rebound, 40% we're going to have a crash.
Thomas, once again, thank you very much for joining us.
Thanks to you.
And thank you for watching. Do make sure you keep clicking back to Dukascopy TV as we bring you plenty more updates and exclusive interviews. Bye for now.